After a discovery hole has been put in place, that's called discovery stage exploration. That becomes much, much, much lower risk. Risky to be sure, but lower risk. But because I'm afraid in any crisis of confidence, afraid that it'll go to $7,000.
Enter Rick Rule's realm of predictions for 2024. Amidst a world witnessing the dollar's geopolitical sway, Rick sheds light on gold's pivotal role as a counterforce. Join us on this thought-provoking expedition into financial dynamics, where each shift in global power amplifies the allure of gold as a shield against extraterritorial dominance. Explore this captivating narrative with us and discover the evolving chessboard of international finance. So, keep watching and keep learning.
What you said is something I'd like your audience to reflect on, because it's very important. There are different ways to add value in the sector. There are different risks and rewards to every aspect of the sector. And when I say the sector, you can subdivide it several ways. One would be by commodity. Gold, silver, iron, as an example. Another would be by stage. Early exploration, advanced exploration, development, construction, production, merger and acquisition. And then, of course, there's division, as an example, geopolitical or political risk division is a deposit in Congo, as an example, rich enough that you can overcome the supposed political risk of being in the Congo? Or should you be in a jurisdiction that you believe at least is less risky? So what you suggest is very true. There would seem to be an investment matrix around most subjects, and understanding the matrix is important. Having pontificated, now let me get into an answer, I think, in the way that you intended it. I think it's important to note, too, that when you look at the matrix, different markets price risk and price reward differently. So there are points of time, as an example, in the early part of the 1990s, when the industry made some profound discoveries. And what happened was that exploration came into favor, and people were paying up for exploration stories, not because necessarily that the future was going to lie in exploration, but rather because success had been demonstrated in the immediate past with regards to the exploration thesis. So I think it's important for the intelligent investor and speculator to understand which part of the investment matrix is most attractive to them in terms of their outlook, in terms of their risk tolerance, in terms of their time preference, but also which part of the market is undervalued in the market relative to others and which is overvalued in the market. I hope that that's a useful introduction for your listeners. In terms of stage, I have enjoyed a lot of success myself in real exploration, which is to say the earliest stage, riskiest sector. In this circumstance, the expectation, the probability is failure. You do it because you can fairly easily screen out the companies that have the highest probability of failure. You do that by screening for explorationists who have a track record of success. The success accrues to a fairly small number of people, and the rewards can be stupendous. I think back as an example to Arequipa resources, 30 cents to $30 in 19 months. The financial reward that accrues to exploration success is unlike financial reward that accrues anywhere else in mining. It's much more like research and development technology. That being said, the high risk nature of it means that it's unsuitable for many people, both financially and psychologically. The amount of time it takes, too, makes it financially unsuitable for many people. But I think it's important that people understand that the early stage exploration companies, if one learns how to do it, generate the highest risk and the highest reward in the sector. Much more tolerant to most people are what I call the discovery plays, where you have done a job targeting. In other words, you have done whatever surface work you need to do to determine that there is mineralization there. But now you need the third dimension. You got to quantify tonnage and grade. So you put a hole in it. After a discovery hole has been put in place, that's called discovery stage exploration. That becomes much, much, much lower risk. Risky to be sure, but lower risk. Similarly, lower reward. In Arequipa, in the prior example, the grassroots exploration phase, the prospect generation phase, the 30-cent phase, the stock went really from 30 cents to $4 on discovery. It went from $4 to $30, certainly an attractive response, but in terms of percentage gains, not as attractive in the sort of discovery phase. So I think you go from grassroots exploration to discovery phase. Once you've gone through discovery phase, once you have delineated the deposit, once you've published a document, well, a resource study, first of all, and a preliminary economic assessment, you're in something called the pre-development or development stage. First of all, when people talk about an all-time high, they're talking about an all-time high in nominal terms, not in real dollar terms. If you inflation adjust the gold price into US dollars, what you'll see is that it isn't at an all-time high at all, that it has lots more room to run. I need to say that I don't pay any attention to the gold price at all in the short term. And I have absolutely no interest in whether gold's at 2,100 or 2,200, or for that matter, at 1,900. I own gold because it is, for me, the best financial insurance class of any asset of its type in the world, and has been for 1,000 years. I own gold not because I think it might go to 2,500, which I do, but because I'm afraid in any crisis of confidence, afraid that it'll go to $7,000 or $8,000 or $10,000. I own it as insurance. And by the way, I really, truly hope it doesn't go to $7,000 or $8,000 or $10,000. The set of circumstances that would cause gold to go that high would change many aspects of your standard of living and my standard of living. And by the way, not for the better. So I own a lot of it, and I hope it doesn't go up a lot, but I think it will. I think that investor expectations around gold were really put in place in the 1982 to 2022 timeframe, the most benign economic climate probably in the history of humankind. The interest rate was falling, the US dollar was strong, globalization in a good sense was happening, demographics, favored investors, and the outcome of all of that was an expectation of financial markets that was confident. I think that's begun to change. Interest rates, in a real sense, probably won't be falling. They may be manipulated lower for a while. The baby boomer demographic has peaked. There's increasing geopolitical tension. I think the next 10 years will be very different than the last 40 years have been. At the same time that I think that the level of government, which we've become accustomed to and believe that we could afford over 40 years, will become unaffordable in the next 10 years, which is to say, I expect some turmoil. And I expect that turmoil will reduce faith in the maintenance of purchasing power of people's savings in US dollar denominated savings products and instruments. And hence, I suspect that gold will do very well. As I say, I don't own it because I'm looking for a move to $2,500. I own it because I'm afraid of a move to $8,000. I don't own it with anything like 100% of my net worth. Because in my experience, when gold moves, a little bit of insurance pays you a huge benefit. I lived through the decade of the 70s, $35 to $850. This was not a 20% move. I lived through 2000 to 2010, $256 to $1,900, not a 20% move. In fact, when people ask me now, Rick, when's the gold price going to move? I tell them I began rebuying bullion in 1998. So for me, the question, when is gold going to move? The answer to that is 2000. It moved from $256 to $2,000. In other words, I got an 8-fold return. Gold has done exactly what I bought it to do. My suspicion is that the move in gold and later silver will be much more precipitous in the next 5 years than it has been in the last 20.
As we conclude this insightful journey into Rick Rule's predictions for 2024, the evolving tapestry of global finance and geopolitics becomes clearer. The narrative of gold's ascendancy as a counterbalance to the dollar's influence resonates profoundly. Remember, these forecasts are but a glimpse into the intricate dance of power shaping our financial future. Stay tuned and stay informed by liking, sharing, and subscribing to our channel, and embrace the ever-unfolding narrative of our global financial landscape. Thanks for watching. See you tomorrow.